What we are about to talk about today is something that is honestly shocking from a pure data point of view. And if you are someone who follows the crypto market closely, especially Ripple and XRP, then this is the type of moment you probably felt was coming for a long time. Welcome back to BullionIQ, the place where we break down crypto and finance in a simple, clear, and realistic way, so you can actually understand what is happening behind the scenes instead of just staring at charts all day. If you are interested in XRP, Ripple, and real market movements, type an X in the comments and tap that like button so more people from our BullionIQ community can find this content. And before we go any further, I want to say happy Thanksgiving to everyone out there. I am truly grateful for this amazing community because this journey is not about one person. It is about us as a group, learning together, holding together, staying calm together, and moving forward as a unit in a market that is often full of fear, manipulation, and emotional pressure. Most of you who are here right now have already done your research. You understand what XRP really is. You know that this is not a traditional company that can be valued like a stock. This is a digital commodity, a powerful cryptocurrency with real-world utility that is designed to solve major problems in global finance, especially in cross-border payments. And that is why this asset is different from the majority of tokens in this space. XRP is not just about hype. It is about function, speed, cost efficiency, and a financial system that the world has never truly experienced before. That is also why it takes a strong community to survive the hard moments. When the price is falling, when the news is negative, when the market feels heavy, it is the community that lifts each other up. And even if there are people out there who hate on XRP and leave negative comments across the internet, I still want them to win too, because in the end, success in this market is not about personal attacks. It is about understanding the future before the crowd does. Now let's speak about the actual numbers, because this is where things start to get very interesting. From day one, XRP ETFs have not reported a single outflow. That means no serious selling pressure from these funds so far. Compare that to Solana, which just recently posted around $8 million in outflows. The difference is clear. Money is not just moving around randomly, it is choosing strength. And right now, that strength is flowing into XRP. This is real demand coming in consistently, not just one big pump and dump event, but steady accumulation. This confirms something we have been talking about on BullionIQ for months. When the ETFs finally arrived, Wall Street was going to step in hard because institutions understand what XRP can do at a fundamental level. They understand that cross-border payments are broken and that Ripple's technology actually offers a real solution. On top of that, firms like Franklin Templeton and Canary have already updated their XRP-related holdings this holiday period. The numbers are eye-opening. Franklin Templeton's XRP-linked exposure is in the tens of millions, while Canary's is even higher, sitting well over 150 million. And when you combine just 4 of these funds alone, the total assets under management already cross over $300 million in the first week. That is not normal. That is not retail investors playing around. That is institutional capital positioning early before the crowd realizes what is happening. And we are not even done yet, because new XRP ETFs are getting ready to go live, and any day now, major players like Vanguard, Fidelity, or even BlackRock could step into the picture. If and when that happens, it will create a level of demand that most people are not even prepared for. This is where the idea of a supply shock comes in. If demand keeps rising and the available supply stays limited, price has only one real direction to go, and that is up. And it will not only be because of ETFs. We also have major macro factors lining up, including new regulatory clarity, financial institutions entering the space, and even global giants like MasterCard stating that crypto is moving into a new era of confidence and transparency. Markets move on emotion, and the strongest emotions are fear and confidence. Right now, confidence is slowly but surely returning. When confidence grows, so does liquidity, and when liquidity comes in, price follows. When we zoom out and look at the broader picture, what is happening with XRP right now is not just a random moment in the market, it is part of a much bigger shift that has been building for years. For the longest time, XRP has been one of the most misunderstood assets in the entire crypto space. Many people counted it out because of the legal battles, the negative media coverage, and the slow price action compared to other coins that pumped hard during previous cycles. But the reality is the smart money does not move with noise. It moves with patience, data, and long-term vision. And now, for the first time in a long while, we are starting to see that quiet patience turn into real action on a large scale. One of the key reasons institutions are showing increasing interest in XRP is because they understand the broken infrastructure of cross-border payments. Today, if you want to send money from one country to another, the process is slow, expensive, and often involves multiple banks, middlemen, and hidden fees. Settlement can take days, sometimes even longer. For large institutions and governments that move billions of dollars every day, that inefficiency is a major problem. This is where XRP and Ripple's technology step in. XRP was built to be fast, low cost, and efficient. Transactions can settle in seconds instead of days. The cost is a fraction of what it is in the traditional system. For institutions that value speed and efficiency, this is not just attractive, it is revolutionary. This is why XRP is not just another speculative asset. It is an infrastructure asset. It is part of a new financial layer that can connect different currencies, banks, and payment systems in real time. When Wall Street, hedge funds, and asset managers look at something like that, they are not thinking about a quick trade. They are thinking about long-term utility and how they can position themselves early in a system that could one day be used globally. That is the level of thinking behind these ETF inflows we are currently seeing. They are preparing for the future, not just the next pump. Another important factor many people overlook is how early this still is. Even with the recent ETF news and the growing attention around XRP, the majority of the world still does not hold any. Most retail investors are either focused on Bitcoin, Ethereum, or the latest meme coin trend. This means that XRP is still sitting in a position where it has massive room to grow in terms of adoption, awareness, and real-world use. Early positioning is where the biggest rewards are made, and institutions know that better than anyone else. At the same time, we cannot ignore the psychological side of the market. For years, XRP holders have had to sit through disappointment, doubt, and frustration. This creates a unique type of investor. It creates people who are either very weak and ready to give up or very strong and deeply convinced. When positive momentum finally starts to show, the weak hands are already gone. What remains is a core group of believers and new, confident buyers. This combination is powerful. It can drive price up very quickly because there is less selling pressure and more strong holding behavior in the market. We are also entering a phase where regulations are slowly becoming clearer. Governments and regulators are beginning to understand that crypto is not going away. Instead of trying to fight it, they are working toward structuring it. Clarity is extremely important for big money. Large investors and institutions do not like uncertainty. When rules become clear, even if they are strict, they feel more comfortable entering the market. That is why every positive step in regulation is actually a bullish sign. It opens the door for more capital to safely flow into digital assets like XRP. When you combine all of these things, institutional interest, real-world utility, growing confidence, reduced supply, and increasing regulatory clarity, you start to see why many analysts believe a major move is not only possible, but highly likely. The market does not always move in a straight line. There will always be pullbacks, fear, and moments of doubt. But the overall direction is shaped by fundamentals, not emotions. And the fundamentals around XRP are quietly getting stronger every single day. This is why it is so important to stay focused and not get distracted by short-term noise. Social media will swing between extreme hype and extreme fear, but data and real-world developments tell a much more calm and logical story. XRP is positioning itself as a core piece of the next financial system. Whether that plays out in 6 months or 2 years, those who understand this early are in a powerful position. And here at BullionIQ, our job is not to tell you what to do, but to give you the information, perspective, and clarity you need to make smart decisions in a world that is changing faster than ever before. If you are still here, still reading, still learning, and still growing, then you are already ahead of the majority. The smart money is not loud. It is quiet, slow, and strategic. And right now, every sign points to the fact that something big is building under the surface. Stay patient, stay informed. The real move usually happens when the crowd least expects it. Big institutions and smart investors do not wait for the news to be everywhere. They enter quietly while the asset is still being doubted by the masses. This is exactly the phase XRP looks like it is in right now. The headlines are still not fully bullish. The mainstream crowd is still not convinced, and many people are still stuck on old narratives from the past. But behind the scenes, the data is slowly telling a very different story. The fact that XRP ETFs are seeing steady inflows while other popular assets are seeing outflows should be taken very seriously. This is not accidental, and it is definitely not emotional retail money. We are seeing a shift from speculation to strategy. That is one of the biggest signs that a market is maturing. In the early days of crypto, almost everything was driven by hype, influencers, and quick profits. Now, large players are looking for real use cases, real infrastructure, and real solutions. XRP fits perfectly into that category because it is not trying to replace the current system overnight. Instead, it is trying to upgrade parts of the system that are broken, slow, and expensive. That is a much smarter and more realistic approach. Banks, payment providers, and even governments need something that can work with what already exists, and XRP is built to do exactly that. On top of that, the global economy is also changing. We are seeing rising tensions around traditional banking systems, inflation in many countries, and people losing trust in centralized financial institutions. When this happens, alternative systems naturally become more attractive. This does not mean traditional finance disappears, but it does mean that digital assets become more important as a hedge and as a new tool. XRP sits in a unique position between the old system and the new one. It is a bridge, and bridges become extremely valuable when two sides need to connect. We also have to talk about timing. Historically, huge moves in the crypto market often happen when people are at their most bored or frustrated. When nothing exciting seems to be happening for a long time, that is usually when pressure is building the most. XRP has spent a very long time moving sideways compared to other big coins. This has caused many people to give up or stop paying attention. But this long period of consolidation can actually be a very healthy sign. It means the asset is building a strong base. And when something finally breaks out of a strong base, the move can be explosive. Then we add in the idea of a supply shock again. XRP has a limited supply, and a large portion of it is already locked, held, or being used inside systems. As more ETFs, institutions, and payment networks start to demand XRP, there is less available for the open market. Basic economics tells us that when demand increases and supply stays the same or decreases, price must rise. This is one of the simplest but most powerful rules in any market, whether it is gold, real estate, oil, or crypto. Many people are still waiting for confirmation before they believe. They are waiting to see a huge green candle, a viral news headline, or a big influencer start talking about XRP positively. But by the time that happens, a large part of the move will already be over. The best opportunities in any market are usually the most uncomfortable ones. They are quiet, they are boring, they are filled with doubt, and that is what makes them valuable. Another thing that matters here is mindset. A lot of people enter crypto thinking it is a get-rich-quick casino. That mindset almost always leads to bad decisions. Real wealth is built by patience, discipline, and understanding cycles. XRP holders, especially those who have held through difficult times, are learning one of the most important lessons in investing: delayed gratification. This is the ability to wait for a bigger future reward instead of small, quick wins. And that type of mindset is what separates long-term winners from everyone else. Right now, everything points toward a transition phase. The groundwork is being laid, the big players are making their moves, and the structure is slowly becoming more visible. We are not looking at random hope or blind optimism anymore. We are looking at facts, movements of capital, strategic developments, and growing confidence. This does not guarantee anything overnight, but it does strongly suggest that the direction is not downwards. It suggests growth, expansion, and a new chapter for XRP. So the real question becomes simple. Will you focus on the short-term noise, or will you focus on the long-term transformation that is quietly taking place? Because the people who understand what is really happening right now are the ones who will look back and say, this is where it all started to make sense. And at BullionIQ, our goal is to make sure you are in that group, not the one that shows up late wondering how they missed it. Now let's talk about human behavior, because in every financial market, price is not just moved by charts and numbers. It is moved by emotions, reactions, fear, confidence, and belief. This is one of the most underestimated forces in crypto. Right now, the general public is still unsure about XRP. Some people say it had its chance years ago. Some think the legal issues damaged its image. Others simply lost patience because the gains did not come as quickly as they wanted. But this doubt is actually one of the strongest bullish signs you can have in an early phase. When an asset is truly dead, no one talks about it, no one cares. But XRP is still being discussed, attacked, defended, analyzed, and debated. That means attention is still there. And attention is the first step toward demand. Most of the time, markets move in cycles that are very similar to human emotions. First comes disbelief, then comes quiet accumulation. Then comes a slow rise that nobody takes seriously. And then suddenly it becomes obvious and everyone rushes in at the same time. That is usually when the biggest move happens. If you look at XRP right now, it feels like we are somewhere between quiet accumulation and the early stages of awareness. The smart ones are already positioning, and the crowd is still sleeping or arguing about the past. This is a powerful setup. Another important element here is narrative. In crypto, narrative often drives momentum. Bitcoin had the digital gold narrative. Ethereum had the world computer narrative. Meme coins have the community joke narrative. XRP's narrative is finally becoming clear to the broader financial world, the bridge for global payments and institutional settlement. Once a narrative becomes simple enough for average people and big investors to understand, it spreads fast. And when it spreads fast, money moves fast. We are already starting to see changes in how XRP is being talked about. In the past, it was called centralized or controlled. Now, more and more, it is being called efficient, compliant, and useful. That shift in language is extremely important. Words shape perception, and perception shapes investment decisions. When the perception changes, the flow of money follows. We should also consider what happens when price finally begins to move in a strong and clear direction. People who laughed at XRP will suddenly start asking questions. People who ignored it will suddenly open charts. People who sold it will feel regret and may try to buy back at higher prices. This creates a chain reaction. It is not just about technology anymore. It is about psychology and social proof. Nobody wants to be the one who missed the next big thing. That fear of missing out is one of the strongest drivers in every bull market, and when it kicks in, it moves like fire. On the other side, institutions are not driven by FOMO in the same way as retail investors, but they are driven by performance and opportunity. If one major fund starts seeing success with XRP exposure, others will follow. No fund manager wants to explain to their investors why they ignored a clear opportunity that competitors profited from. This creates another kind of domino effect. It is more quiet, more professional, but just as powerful. And this is how markets shift from early stage to mainstream adoption. One more thing that really stands out right now is how calm XRP has remained despite all the pressure in the wider market. While many assets move in wild swings, XRP has been building slow and steady support. That kind of behavior is usually seen in assets that are being accumulated by strong hands. Strong hands don't react to every small dip or spike. They think in years, not days. When strong hands hold an asset, they remove it from circulation. This further reduces available supply and makes future moves even more aggressive when demand rises. All of this leads back to one simple idea. Preparation happens in silence. Explosions happen in public. We are still in the silent phase. But silence does not mean nothing is happening. In fact, it often means the most important things are happening behind the scenes. That is why it is so important to stay educated, stay calm, and stay focused. Not because someone promised a certain price, but because the structure being built right now is something the world has never seen before in finance. And whether you are holding a small amount or a large amount, the real value comes from understanding the bigger picture. XRP is slowly positioning itself not just as another crypto, but as a core part of a new financial system that is still being formed. And those who recognize that early are not lucky. They are simply paying attention. Finally, let's put all the pieces together and understand what this really means for XRP holders and the broader crypto market. When you step back, it becomes clear that we are in a rare alignment of factors that could lead to a major upward move. You have institutional inflows steadily increasing through ETFs, retail investors quietly holding or accumulating, regulatory clarity slowly emerging, and a narrative that is finally resonating with the larger financial world. Each of these alone is important, but together they form what many analysts would call a perfect storm. And perfect storms in financial markets tend to create explosive price action. We also need to think about liquidity. Markets cannot move without liquidity. And right now, liquidity is coming into XRP from multiple angles. You have ETFs adding large sums, you have early adopters and long-term holders maintaining strong support, and you have institutions starting to recognize XRP's utility as a payment bridge. When all of these sources converge, it reduces supply in the open market. A lower supply combined with rising demand is the fundamental recipe for strong upward price movement. And it's not just about immediate pumps, it's about building a sustainable foundation for growth. Another point that often gets overlooked is market psychology. Crypto markets are unique because sentiment plays such a huge role. When investors see institutions moving into an asset, confidence grows exponentially. Confidence feeds more confidence. And this is exactly what we are seeing with XRP. More people are starting to realize that this is not just a short-term trade. It is a real opportunity to be part of a transformative system in finance. This kind of awareness brings stability to price movements because it attracts investors who are focused on long-term results rather than quick profits. Let's also not forget the macroeconomic factors. The world is changing fast. Traditional banking is under pressure. Payment systems are strained, and people are looking for faster, cheaper alternatives. XRP fits perfectly into this narrative because it offers a solution that is scalable, efficient, and ready to work with existing systems. When you combine this with regulatory clarity and institutional interest, it becomes evident that XRP is positioning itself as more than just a cryptocurrency. It is becoming part of the infrastructure that could shape the future of payments worldwide. We have to address the potential for volatility as well. Crypto is known for its ups and downs, and XRP is no exception. But volatility is not always bad. In fact, it can be a signal that momentum is building. When the market consolidates and volatility decreases, it usually indicates accumulation by strong hands. When volatility picks up after that, it often signals the start of a major move. Right now, XRP is showing signs of both consolidation and strategic accumulation. Those who understand this dynamic can position themselves advantageously. Lastly, it's important to keep perspective. XRP is not about chasing headlines or the next viral hype. It's about understanding the fundamentals, watching the institutional moves, and recognizing when the market structure is changing. This is exactly the kind of setup that has historically led to some of the most dramatic moves in financial markets. By staying informed, patient, and strategic, XRP holders can take advantage of the coming momentum in a way that short-term traders often miss. So, as we wrap up this discussion, the key takeaway is this. We are in a unique phase for XRP. The combination of strong institutional interest, growing confidence, supply constraints, regulatory clarity, and the evolving narrative around XRP's role in global payments is creating a rare opportunity. The groundwork is being laid quietly,